All right, ready to dive into some Chicago real estate?
Let's do it.
Today, we're going to crack the code on cap rates.
Ooh, cap rates, everyone's favorite.
It's how the pros size up deals.
It's true.
We're going to break it all down so you can analyze those investment opportunities like a pro.
Love it.
And guiding us on this journey is, well, you could say the Chicago real estate guru himself, Michael Linton.
The one and only.
This guy's been in the game for, what is it, like 38 years?
Something like that, yeah.
Talk about serious street cred. He's even got this treasure trove of insights over at chicagodealflow.com. Have you seen this site?
Oh, yeah, definitely. It's a gold mine.
But before we get lost in the data, let's set the scene here.
Okay.
So imagine you're looking at two totally different properties. One is this sleek glass and steel office tower right downtown.
Prime location.
The other, a charming multifamily building, but in a neighborhood that's, about to explode in value.
Ah, the up-and-comer.
Exactly. So how do you even begin to compare these two?
Right, how do you...
That's where our good friend, the cap rate, comes in.
It's a lifesaver, honestly.
So let's demystify this whole cap rate thing. Can you give it to us plain and simple? What are we talking about here?
Think of it like this. The cap rate is a quick indicator of a property's earning power.
Earning power, okay.
Yeah, it's like a quick snapshot expressed as a percentage. Helps you understand, the potential return on your investment.
Okay, so like a universal translator for real estate, kind of.
Exactly. That's a great way to put it.
A way to compare those downtown skyscrapers with, like, the hidden gems in those up-and-coming neighborhoods.
All on a level playing field, yeah. Cuts through all the noise.
And I'm guessing higher cap rate usually equals what? Juicier return?
You're on the right track.
Yeah.
Generally, higher cap rate does suggest a higher potential return, at least on paper.
At least on paper, there's always a catch.
Always. But this is where things get interesting. Higher cap rates often come with a bit more risk.
Ooh, risk. Now we're talking.
Right. There's always a trade-off.
There's always a trade-off, yeah.
I remember this one time. This is a story Michael told me. Early in his career, he came across this property. High cap rate. Seemed amazing, like a steal.
But
It turned out the building needed a new roof, plumbing was shot, tenants weren't exactly reliable.
ouch. So even though the cap rate looked great on paper,
Code of money pit.
yeah, a potential disaster.
Exactly.
Hmm.
That's why you got to dig deeper. Look past just the numbers on the surface.
Okay, so how do we calculate this magical cap rate? Give us the formula.
All right, so it's actually pretty straightforward. You take the property's net operating income.
Net operating income.
Yeah, NOI for short. You divide that by the market value and then multiply by 100 to get the percentage.
Hold on, NOI, what goes into that again?
Good catch. So NRI, that's the annual income a property brings in, but after you've taken out all the operating expenses.
Right, expenses, okay.
Things like your property taxes, maintenance,
Yeah.
insurance, all the costs of keeping the lights on.
So it's not just the rent checks coming in, it's what's left after you pay to keep the place running.
You got it. NOI gives you that clear picture of the property's earning power before you even think about financing.
Makes sense because everyone's financing is going to be different.
Exactly.
Okay, let's play this out. Remember that multifamily building we talked about earlier?
Yep. The up-and-comer.
Say it's listed for, let's say, $5 million.
Okay.
And we're projecting an NOI of $400,000 for the year.
All right, so let's break out the calculator. We take that $400,000 NOI, divide it by the $5 million market value, and multiply by 100.
Which gives us, drumroll, a cap rate of 8%.
Nailed it.
Okay, so we've got our hypothetical investment here, 8% cap rate. But how do we know if that's good or not? Is there some magic cap rate number we should be aiming for?
I don't think it were that simple. There's no magic number, really.
No magic number.
Nope. It all comes down to risk.
Risk, right.
And risk is, well, it's unpredictable.
Always.
Even in a city like Chicago, cap rates can be all over the place.
Yeah, that makes sense.
Depends on the neighborhood, the property, all sorts of factors.
So location, that still matters, right? I mean, a storefront in Wicker Park,
Sure.
that's got to be a safer bet than the same property out in the suburbs, even if the numbers look the same on paper.
You're getting it. See, that Wicker Park address, that comes with less risk.
Right.
So investors might be okay with a slightly lower cap rate.
Trading a bit of that potential return for less risk.
Exactly. Peace of mind.
Peace of mind, that's valuable. But it's not just about the zip code, is it? What else should we be looking at when we're trying to figure out these cap rate mysteries?
Okay, good question. So beyond location, think about the property's condition.
Okay.
A brand new renovated building that's going to have a different cap rate than, say, a fixer-upper.
Right, because the fixer-upper, that comes with all the cost and risk of the renovation.
Exactly. Higher risk, but also potentially a higher reward.
If you know what you're doing.
Exactly. And then don't forget about the tenants.
Ah, yes, the tenants.
Having good tenants, long-term renters, that's like winning the lottery in real estate.
Steady income, fewer headaches.
Exactly. And that usually means a lower cap rate because, investors feel good about that steady cash flow.
It's like anything else, right? The more desirable it is, the more people want it, the higher the price.
Exactly. And we can't forget about the big picture stuff like interest rates.
Ah, yes, interest rates, the elephant in the room.
They can really shake things up in real estate.
Yeah, how so?
Well, when those rates are low, borrowing money is cheaper.
Right.
So you have more investors out there looking for deals. That pushes demand up, prices go up.
And because the property price goes up, but the income might stay the same, the cap rate goes down.
Exactly. It's all
It's
connected.
a domino effect.
But hey, even with a lower cap rate and a hot market, that doesn't mean it's a bad investment.
Right, right.
You just got to adjust your expectations, factor in those market trends.
Okay, this is making me think. We've talked about what a cap rate is, what affects it, but how do we use this knowledge in the real world? Let's say I want to buy some property in Chicago. How does the cap rate help me make a smarter decision?
Ah, now we're getting to the good stuff.
Right.
Think of the cap rate as your guide, your sidekick in the world of commercial real estate.
I like it.
Remember those apples and oranges we talked about? Like that Wicker Park storefront versus, say, a multifamily in, I don't know, Ukrainian village?
Totally different, yeah.
Totally different. But the cap rate, that lets you compare them head to head.
Okay.
You can compare different properties, different neighborhoods. You can even factor in those renovation costs we talked about, potential rental income.
So I can ignore my gut feeling, oh, I love that exposed brick wall.
Right, exactly.
And let the numbers lead the way.
Let the numbers guide you to the smartest investment. And speaking of smart investing, cap rates can help you find those hidden gems.
Hidden gems, tell me more.
Say you're looking at listings, right?
Or
And you see a property, the cap rate is way higher than everything else in the area.
Now, that could be a red flag, right? Like we talked about with Michael's story. High cap rate, the building was a disaster.
True, it could be. But it could also be a diamond in the rough.
Yeah, interesting.
Maybe it just needs a little love or it's been overlooked for some reason. That's your cue to investigate, do your research.
Do your due diligence.
Exactly. And this is where someone like Michael, with his experience, that's where he really shines. He can spot those overlooked properties.
He's like a real estate detective.
He's got the knack. But, okay, so let's say you found a place, you're ready to make an offer.
Okay.
How does the cap rate play into that negotiation?
Yeah, that's a good question.
This is where it gets powerful. Instead of just throwing numbers around, based on gut feeling,
Right.
you can use that cap rate analysis to support your offer.
So instead of, I feel like this is a good deal, I say, based on my cap rate calculations, this is a fair offer.
Exactly. You come to the table,
Yeah.
speaking the language of cap rates. That shows the seller you're serious, you've done your homework.
You're not messing around. So it's
Yeah.
like you're bringing data to back up your offer. I like that. Okay, let's say I've navigated the world of cap rates. I close the deal. I'm officially a real estate mogul.
Congratulations.
Do I just calculate the cap rate once and then forget about it? Is that it?
Not even close. Closing
Yeah.
the deal, that's just the beginning.
Ooh, okay.
Okay.
So it's not a set it and forget it kind of thing.
Nope, not at all. The real estate market, it's always changing.
That's true.
Interest rates go up and down, neighborhoods change.
Right.
Even your property, gets older, things happen.
So those brand new appliances I put in to attract those tenants,
Right,
they aren't going to stay new forever.
exactly. That's why you got to keep recalculating that cap rate.
Really? Keep recalculating.
Oh yeah, it's like a checkup for your investment. Make sure things are still on track.
I like that. So how often are we talking? Should I be doing this like every month?
You don't have to go that crazy. Once a year is a good rhythm. Revisit those numbers, see how the market's doing, see if your cap rate is telling a different story.
So let's say I'm doing that, checking in on my cap rate every year,
Right.
and I see it starting to go down. What's that telling me?
Good question. Could be a few things. Maybe the market's cooling off a bit.
Okay.
Could be the property needs some work. Or maybe the neighborhood isn't as popular as it used to be.
So it's a sign to like investigate, not necessarily freak out.
Exactly. Don't jump to conclusions based on just the cap rate. It's just one piece of the puzzle.
Right. It's about being informed and staying flexible,
Right.
making good decisions with all the information.
You got it. Knowledge is power in real estate. And understanding those cap rates, well, that's a superpower.
It's like X-ray vision. You can see past the surface, figure out what something's really worth.
That's a great way to put it.
Make smart choices based on data, not just a hunch.
Exactly. And that's what Michael helps people do. He gives you the knowledge, the tools you need to navigate this crazy market.
Speaking of anyone listening, if you want to learn more about the Chicago market, you got to check out his website, chicagodealslow.com. It's like a gold mine of information. But for now, let's recap what we've covered today.
Sounds good.
We talked about what a cap rate is, how to calculate it,
The whole 9 yards.
how to use it to compare properties, make those offers, even track your investments over time.
And how to avoid those common pitfalls, like getting dazzled by a high cap rate and not seeing the risks.
Right. It's not about chasing the biggest number. It's about finding the right investment for you.
Well said.
But before we wrap up this deep dive, I want to leave you with something to think about. We've been talking a lot about the money side of real estate, you know, the profits, the returns, those cap rates.
Right.
And that's obviously important. But what about the bigger picture? What about how our investments affect the community?
That's a great point. It's about more than just bricks and mortar, right? It's about people.
Exactly. So as you're out there building your real estate empire, think about how you can use your investments to make a difference. Maybe it's creating affordable housing or bringing a struggling neighborhood back to life.
Right.
Or even building in a way that's better for the environment.
It's about looking past just the money and realizing that real estate can be a force for good.
Exactly. So while you're analyzing those cap rates, crunching those numbers, ask yourself, how can I use this investment to not just make money, but to make a difference?
Love that.
It's a challenge, but it's one worth taking on. And on that note, we're going to wrap up this deep dive on cap rates. Until next time, happy investing, everyone.